Hey, it's Stocks Market Minute for Wednesday, July 8th. And it's been a long time since I've talked about this, but I think now might be the time with us seeing a little bit of a distribution phase in the market, which is really quite different from what we've seen over the past, especially 2 years. We've gotten very, very used to the market just buying every single dip that's out there. And we've forgotten what it feels like when markets are actually in corrective mode. Now, one of the things I've noticed, and I made mention of this in an interview the other day, is that I begrudgingly said, well, look, I expect by the end of the week that certainty will come back to the market, that they're going to resolve things, and that we may end up higher at the end of this week, even if that creates a lower high. But what I also noticed is that whenever we have these negative news events, like Greece is obviously one of them right now. Obviously, everybody's got their eye on Greece to see what happens. And again, even though the economy of this country is the size of the Dallas-Fort Worth area and should be relatively insignificant, it's the uncertainty that this situation brings to bear. And what I've always noticed is that when something negative like this comes along, all of a sudden, it's like a magnet for other negative news events. And right now what we're also seeing is that China is just getting their hat handed to them. I don't have the actual Shanghai index feed. I do have the ETF of the FXI. And you can see this thing's just getting slaughtered over the last 3 months, and especially this week as the prices are coming down. I mean, it's almost 5% today alone. And this is what we've experienced in prior distribution phases before, most recently 2011, when we were going through the same things with Europe and wondering whether Greece was going to be part of the euro exactly 4 years ago. And then all of a sudden, a news event hit the tape on a Friday afternoon after markets had stopped trading. And that was the Standard & Poor's rating firm had actually downgraded the United States. And so it almost begins like an avalanche. Like you start off with one bad news event and it starts the market moving down, and then that bumps into another news event and that really starts to get things moving. And so perhaps China is the second phase of this, where we have Greece having issues, which in turn gives uncertainty towards Europe and the euro, and all of a sudden China is just falling apart. And this goes back to what I say, anytime that you see markets going nearly vertical, it always is going to lead to a bad scene on the back end of that tape. So this is as good a chart as any. What I want to go over really quickly is here the 4 phases of a market cycle. The 4 phases of a market cycle. And they start with, well, they can start anywhere, but the easiest way to start them with is disgust. And this is what China is going through right now, is the disgust phase, where everything is falling to pieces right now. And investors are absolutely disgusted with their portfolios and their holdings. They can't even look at their screens. And this was a big warning when you saw basically farmers out in the field with a laptop trading stocks just recently. And that's always a bad thing when your barber starts to give you stock advice. Usually the end is near. We haven't seen that in the United States for quite some time now. But in China, that's what was happening. And that's when the last retail investor gets on board. That's usually the top. So the first phase is disgust. And we can see this is a disgust phase here. And the second phase after that is disbelief. All of a sudden we see a very sharp rally from the disgust phase, and nobody can believe it, because this is where people have sold out. This is the capitulation down here, where people finally say, all right, I quit. I don't know what I'm doing, or I can't stand the losses anymore. I can't stand to look at this. I'm going to sell out. And that capitulation leads to, all of a sudden, a lot of selling exhaustion, basically, where there's just no sellers anymore because they've all sold out. So all of a sudden, the vacuum creates this move to the upside, which is the disbelief. So nobody can believe that it's rallying. And then after time, what happens is the third phase, which is acceptance. Everybody accepts that the market by this point is going higher, certainly higher than the disgust phase that it was back there. So this is where there's general conventional wisdom says, yes, the market's heading higher from here. And then the final phase is euphoria. This is phase number 4, is euphoria, where everybody is convinced that the market will never go down again, and everybody is chasing after the market. And then, of course, this leads to disgust. So these 4 phases occur over and over and over again. They've been happening for hundreds, if not thousands of years in any market that's freely traded. And they will continue to happen. So it doesn't matter that we have robots trading for us. It doesn't matter that we have quants and algorithms and high-frequency trading. None of that really matters, because it all comes down to human emotion at the end of the day. And machines are programmed by humans, which are going to put their emotion into that algorithm. So the 4 phases of a market cycle here: disgust, disbelief, acceptance, and then finally euphoria. And then it repeats all over again. Well, I'll be interested to see if there's any other events that tack on top of Greece and China, and that would sort of fulfill this avalanche theory that I have about how market events kind of collide with each other and create this storm of selling. Thanks for listening. We'll see you tomorrow.